Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And today is February 27, and we're starting from euro-dollar pair with Jakub Novak. GDP data and the leading consumer climate index from Germany disappointed traders, which led to the fall of euro-dollar pair on Friday morning. Then, a jump in US PCE and household spending strengthened dollar, resulting in a further decline in the pair. Today is going to be quite a day despite the reports on consumer confidence, private sector leading, and M3 money supply. Of those, hardly anything major is likely to affect euro, but the speech of ECB's board member Philippe Lane may lead to an upward correction in the pair. Long-term inventory change and outstanding home sales from the US are coming out in the afternoon, which will again play in dollar's favor as stronger statistics will prompt the Fed to keep raising rates. The speech of FOMC member Philip Jefferson is unlikely to lead to a strong surge in volatility. Buy euro when the quote reaches 1.0551 and take profit at the price of 1.0592. Growth will occur, but it will only be an upward correction at the beginning of this week. Nevertheless, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought at 1.0528. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.0551 and 1.0592. Sell euro when the quote reaches 1.0528 and take profit at the price of 1.0490. Pressure may persist in the morning. However, make sure that when selling, the MACD line is below zero or is starting to move down from it. Euro can also be sold at 1.0551, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.0528 and 1.0490. How to trade GBP USD pair Petr Yakimowicz describes. GBP USD has been trading upside this morning. The correction is in progress. Key resistance zone for the GBP USD is set at the price of 1.20 and 1.2010. Rejection of the key resistance zone may indicate further downside continuation. Stochastic and MACD oscillators are showing upside reading. That is another confirmation that upside correction is in progress. In case of the further downside movement, without testing the key resistance zone, next downside objective is set at 1.9020. The next in line is Larry Bailey with USD GBY pair forecast. Let's have a look. On Friday, the yen showed its intention to break through the 137.70 target. Overcoming the resistance of this embedded price channel line will allow the pair to try and hit 138.90 and 140.90, as well as other target levels. However, this brilliant plan is hindered by the Marlin oscillator, which is very reluctant to continue rising on the daily chart. The prospect of its growth is great, but the potential for reversal to the downside is also great. It's very likely that before the price climbs above 137.70, the correctional decline to 133.90 will follow. On the 4-hour chart so far, the situation supports the growth scenario. The price is above the indicator lines, and after the reversal from the MACD line, the Marlin oscillator is in a position to rise. We are waiting for the completion of the growth branch of the 133.90 to 137.70 range. More details for intraday trading plan for USD JPY would present by Dimitrios Tsapas. At the opening of trading this week, the Japanese yen is trading around 136.24, above the 21 SMA and above the 7-8 Muri. On Friday last week, USD JPY broke through the uptrend channel that has formed since February 14 and reached a high of 136.51. It occurred as a reaction to the upbeat US inflation data. According to the 4-hour chart, we can see that the yen is showing signs of exhaustion. There could be a technical correction in the next few hours. The quote could reach the support zone on 135.75, 135.50, 21 SMA. The Japanese yen has rebounded since bottoming out of the uptrend channel formed on February 7. Around 134.01. The rebound was followed by a strong reaction to reach the area of 137.50. An accumulation of 350 pips in a trading day. We can expect that in the next few hours, but there will be a technical correction toward the area of the daily pivot point located at 135.63. This level is being supported by the 21 SMA 135.20 and could give us an opportunity to buy with targets at 136.50 and 8-8 Muri at 137.50. In case the yen falls below the 135.60, there could be a bearish continuation and the price could reach the 6-8 Muri, located at 134.37. Our trading plan is to sell at current price levels around 136.50 with targets of 135.93 at 135.60. Additionally, if the USD GPY pair consolidates in the 135.50 area, it could be seen as an opportunity to buy with targets at 136.50 and 137.50 88 Murray. That's all for today. See you next time. Good luck.